Good evening. Welcome to my short talk on how to reduce your capital gains tax. Firstly, capital gains tax was introduced because capital was never taxed. And then disputes arose as to whether the transaction was one of a disposal of income or disposal of capital. So in 1965 legislation was brought in to tax capital gains. When you do have the sale of an asset, don't immediately go to capital gains tax for the liability. The first port of call is whether or not the disposal is liable to tax, income tax in fact, for example as profits of a trade. So if in doubt, have a word with your accountant. The legislation charges a person who's resident and ordinarily resident in the UK to tax on worldwide assets. Many people think that if they have a holiday home in Spain, it's exempt from British capital gains tax. Unfortunately, that's not so. However, if you're not resident and not ordinarily resident, then you pay no tax in the United Kingdom on assets that are situated here. Obviously, becoming non-residents is a way to avoid capital gains tax, but therein lies a problem. Do not rely on the concession that enables you to be treated as resident and not resident in the same year for proportionate periods. Make sure you're absent from the UK for the entire tax year. There was a famous case of Fulford Dobson v HMRC that established that principle. The next way of reducing your capital gains tax is clearly to use your annual exemption. Currently that's £10,600 for both you and your spouse, and you should do everything in your power to make sure you use that up annually. That's a total of £21,200 tax-free, worth having. Gains over that are charged at 18% and 28% if you are a 40% taxpayer. Another way to minimise capital gains tax is to utilise the principal private residence exemption. Now this should be done with care, but can be a source of good tax-free income several times during your lifetime. This requires an entire video on the subject, and I won't attempt to go too far today. But some people think that if they move into a house, do it up, sell it, there is no capital gains tax. But if the prime motive for your entering into the transaction is to make a profit out of it, that exemption does not exist. But again, this is a huge subject and I don't want to go into it much further. Another relief, and a substantial relief at that, which reduces capital gains tax to a mere 10%, and I don't think anybody in this country can grumble at paying tax at 10%, is where you sell an asset relieved under what is called entrepreneur's relief. That, broadly speaking, is the sale of a business or shares in a trading company that you have owned throughout the final 12 months of activity. All the foregoing are simple ways to reduce capital gains tax and can be planned for. And as for all taxes, planning is of essence. I hope you have found this short video to be of some help. If you would like further information on any of the subjects touched, please feel free to email me at peter@peterclare.com. That's peter@peterclare.com.